Provident Healthcare Partners is a healthcare investment bank that is focused on transaction advisory services. We created this podcast for healthcare executives, entrepreneurs, shareholders, and providers who are interested in learning more about the world of healthcare consolidation.
Welcome to the latest episode of Provident Healthcare Partners podcast. This is AJ Shekar speaking. I'm a Senior Vice President with Provident. The topic of today's discussion is the home health and hospice space and transaction considerations for shareholders and management team members within the sector. It's a segment of healthcare that we've seen to have a significant level of consolidation and investment activity recently, and we wanted to take the podcast today to provide some perspectives to our listeners on the state of the market from advisors who are working on these transactions on a day in and day out basis. From Provident, I'm joined by my colleagues Kevin Palamara, who's a managing director with the firm, and Jake Vesely, who's a senior analyst. And we also have a guest on our podcast today, Les Levinson, who's a partner with law firm Robinson & Cole, and he is the co-chair of their transactional health law group. Les, welcome to our podcast. It's nice to have you on. And if you wouldn't mind for our listeners, giving a brief overview on yourself and Robinson Cole, if that works for you.
Yeah, I'd be delighted. So thank you guys for having us today. As you know, it's really been an active market and an exciting area to talk about. So the hour or so is going to go by pretty quickly, and we'll feel like we've only scratched the surface. So as you said, I co-chair our firm's transactional healthcare practice. I've been in this space pretty much my entire professional career doing M&A, finance type transactions, principally for home care, hospice, behavioral health, physicians, and other verticals. Our firm is full service. We have about 250 lawyers in our 14 offices nationwide. Our practice is nationwide. And typically we're in the mid-market to upper mid-market kind of transactions, often on the sell side, but quite often on the buy side, representing, or on the other side of a private equity firm. On the sell side, it can often be a legacy owner who's transacting. We may be working with or against a strategic player in that transaction. We often work with investment banks like yourselves and other intermediaries, and we feel like we have a pretty good sense of what's going on in this particular market. Some of the deals that we've done recently that I can speak about publicly are the Serenity Hospice deal, where we represented the seller there to St. Croix, which has subsequently been acquired by, I believe, HIG Capital. Earlier, we represented Optimal, which was a large hospice provider out in California. Currently, we're working on 5 active home care and hospice transactions, so it really seems like the market is exploding. We provide the full range of services, typically heading the transaction, but we complement that with employee benefits, tax, labor, litigation, privacy, and other practice areas that are needed really to bring the transaction forward. So I think and hope that's a pretty good overview of who we are and what we're doing. As I said, we're working nationally. The practice really feels like it's going to continue to be very, very active going into next year. And I'm sure we'll talk about that a little bit more as we get into the podcast.
Terrific. Thanks, Les. That's a good overview and good introduction. I'm sure that we'll have a number of exciting topics to discuss today and welcome your insights. So I think, as I mentioned in the introduction, and Les, you touched on in your background and overview as well, we've been seeing, really a significant level of activity within what I call the broader post-acute care market. And there have been not only landmark transactions in the space, we've seen large organizations like Simplura Health Group being acquired by Provident Service Corporation in the Medicaid personal care field, but also groups within the hospice arena like St. Croix Hospice going through a private equity recapitalization with HIG Capital, Max and Karen Seasons Hospice merging within the hospice arena, but also, really dozens of transactions within the middle market and several local consolidation plays as well. Maybe I could pose this question to Kevin first at Provident, and would love to get Les's take as well. But, what from your perspective, Kevin, is causing the flurry of transaction activity that we're seeing these days within home health and hospice?
Yeah, thanks, AJ. And Les, thanks for joining us for the podcast today. There are, several factors that are leading to, this wave of consolidation, which really is unforeseen within the post-acute care sector. I'll just start, first with some of those larger private equity transactions you mentioned, AJ. We just happen to be at an inflection point with several of these large platforms, including St. Croix, with Vistria and Care Hospice that was working with Martis, with Wellspring and Help at Home. They were really in that, point in time with their portfolio company years, 3, 4, and 5, where it was a natural time for them to look for an exit. So as you think about private equity groups and having kind of a 5-year window for their investments, those deals just so happen to be at that inflection point and seem to line up at the same time. And obviously within hospice, I think is probably the best example of, an industry right now where hospice has become more and more utilized over the years. They haven't had the headwinds of the home healthcare community. And we've seen some pretty incredible platforms being built across the country. And it's pretty unprecedented at this time to see this activity, within the space. I think, one of the other factors as you think about things from a strategic perspective, you are seeing those publicly traded entities, of which I would include LHC Group, Amedisys, Encompass. You're starting to see them obviously have tremendous success in the public markets, just as just about everybody else has if you've been, tracking your 401k for the last 6 months. But they are flush with cash. They have tremendous access to capital. They're trading at incredibly high valuations right now. And what you're seeing is them taking advantage of that and increasing their presence in certain areas. So, for instance, you have seen Amedisys for the past few years really build up a significant presence via acquisitions in the hospice space to complement their existing home healthcare presence. I think we will see LHC Group doing the same thing. And then in a little bit of a different, way, we are seeing Addus Healthcare, who is a Medicaid heavy provider, someone that is focused very heavily on the personal care space, moving very, very aggressively into hospice as a complementary area for them. And what you're seeing with Addus is, they're making some pretty incredible acquisitions and at some pretty eyebrow-raising valuations, if I'm being honest. But they're focusing in on markets where they have a very dense population of Medicaid patients. So you just saw the Queen City deal that they announced. About a year or two back, they announced the very large HPA deal, which again, if you look at the markets, they really focused in there on markets where it was highly, highly complementary for their current operations. And that's a theme we're starting to see across the board. This isn't 10 years ago where everybody kind of stayed in a silo and you had Medicare home health providers, Medicare hospice providers, and Medicaid home care providers. Everybody's building a full continuum of care now. I think Kindred really started that trend. And we've really seen it kind of evolve now to all of the publicly traded large strategic players. So those are really, AJ, those are some of the factors that are leading to, especially for the last quarter or two, an unprecedented time in M&A for post-acute care.
Yeah, those are all really important points. And Les, maybe from your perspective, have there been any kind of legislative, regulatory developments that have similarly influenced deal activity today in conjunction with what Kevin mentioned from kind of the business side of things?
Yeah, a little bit, but let me take a half step back maybe and then just sort of piggyback on some of the things that Kevin was saying. So I think we definitely saw a dip towards the latter part of Q1 and through Q2, and that transactional activity kind of froze up. And we sort of felt like when we got to the middle of June that things would begin to take back off again. So I certainly think that has, very much been the case. Valuations are very strong in hospice as well as improving and in home care. I think the market, in sort of an odd way, AJ, not that anybody would wish for a pandemic to shine light on something like home care and hospice, but I think it really has, validated some of the notions that people in these industries have been talking about for some time. And clearly, you have a population that doesn't want to be in a congregate setting, that would really prefer to get out of that, to stay home. And I think the market is appreciated that. So perhaps there were some players who weren't in home care or hospice who were actively looking for investment opportunities, and all of the other ones that were already in the space, clearly wanted to continue to grow their portfolios, as Kevin noted, a number of those transactions in and the healthy multiples. So not specifically from a legislative perspective, but more from a holistic perspective. People are seeing, wow, home care and hospice really make a lot of sense. And here's another reason why. As Kevin also noted, there continues to be a strong amount of private capital available. Interest rates are basically negligible, so transactions can be levered properly. So the dynamics for having a robust M&A market, are there. And you had a lot of pent up demand from people who were sitting on the sidelines for 3, 4, 5 months that are now back in and actively competing for deals and wanting to get them over the goal line.
Yeah, I think, especially coming out of COVID, a lot of the tailwinds supporting the home health and hospice space have really accentuated interest from a number of different players, like you both mentioned, whether they be private equity firms seeking to participate in some of the positive macroeconomic demand drivers within home health and hospice, but also some of these participants from kind of an adjacent industry perspective looking to expand their continuum of care or simply leverage some of their existing relationships in a synergistic way by making platform caliber acquisitions that really complement their existing service line and augment their entire strategy. And I think points that you both mentioned that are interesting is that what seems to be the case here is that there's a number of different players that are expanding their interest levels within the home health and hospice field, which obviously offers a number of opportunities for an independent organization seeking a potential partner. Jake, maybe you can describe what the buyer community looks like today, and even if you were to get into a little bit more detail, what differences you're seeing in terms of interest and appetite for hospice assets versus Medicare home health versus personal care.
Sure. So, I think to begin, which Kevin, alluded to a bit earlier, is, we're seeing a much more diverse investor base compared to what we saw historically, which, previously used to just be large strategic groups acquiring home health and hospice providers or established private equity firms making these acquisitions. I think some of the transactions that we touched on briefly, like Addus Healthcare, who exclusively focused on the Medicaid non-skilled space, their entrance into the hospice space a few years ago, and last year they made a big acquisition with the Hospice Partners of America deal, and recently with the Queen City Hospice. We're seeing a lot of these strategic consolidators get very aggressive in valuations in an attempt to diversify their service offerings. We're also starting to see some out-of-the-box players start to make acquisitions as well, like the Provident Service Corporation transaction that you alluded to, AJ. We have a provider of non-emergency medical transportation that's making an acquisition to get into the non-skilled personal care space. So, it's interesting to see, these different providers utilize M&A in an attempt to try to capture this care continuum. On the private equity side, obviously, due to favorable tailwinds in the space and the fragmented nature of the space, home health and hospice remains a very attractive area for private equity to deploy capital. We're continuing to see an influx of new private equity firms that are looking to make investments into the space. So as a result, it is a good time for companies to explore opportunities, just given how much competition is out there from the private equity firms and new strategics making entrance into the space. But, overall, in terms of what we're seeing, I would say that hospice continues to be the most sought after area within post-acute care. We're still seeing a high level of interest for Medicaid personal care as well. I think demand for that has remained steady over the years. I think where we saw a bit of headwinds in early 2020 was in the Medicare skilled home health arena. We've seen a bit of reimbursement challenges over the years, and the recent introduction of PDGM and review choice demonstration, and most recently the final rule. There was just a lot going on with the reimbursement landscape there that saw a bit of hesitancy from investors to potentially start new platforms in the space, or for their existing platforms to continue to make add-on acquisitions. I think since then, we have a better understanding of PDGM and can more accurately model out what cash flows will look like under this new model. So I think that we'll start to see some increased M&A activity as we go into 2021, now that we have a better understanding of the reimbursement changes.
Yeah, those are all good points, Jake. And I think, you touched upon the number of different players within the space that are seeking acquisition and opportunities, which creates a lot of choice, if anything else, for independent organizations considering their options. And I think the perspective on kind of interest levels and headwinds, tailwinds, and each of these constituent parts, the post-acute care continuum, are definitely helpful as well. Les, I don't know if you had anything else to add based on some of the work that you've been doing on behalf of your clients, but I think, safe to say, it seems to be a very active marketplace and a number of different potential opportunities, I'm sure, for your clients as well.
Yeah, very, very much so. I think I wanted to add one little piece that perhaps we didn't touch on there, that we're seeing a lot more interest in the private duty space and the private pay space, which maybe had not been attracting the same kind of attention for. So there are some folks who are actively trying to grow their platforms or make platform acquisitions. We have several clients in that space, and they're getting a great number of inbound calls from investors to see if they're interested in transacting. It's just a really frothy time for all the things and the reasons that that we've been talking about. And I don't think, you guys as bankers, as you're working with your clients who have some degree of scale, if you're putting a process together and you're going out to market, I'm sure that you're seeing, a lot of competition and interest in those kinds of quality assets. So we can talk about a little bit more, but that just further strengthens the notion that these are very, very favorable times in this industry.
Yeah, and I think for those groups that are interested in pursuing their options and exploring what exists out there from a transaction standpoint, it's very important to take the appropriate steps to ensure that the company is prepared to go through a transaction, not just to maximize value and deal terms and create an optimal outcome, but also to ensure that the process itself goes very smoothly. Kevin, maybe you can talk about some of the key steps from a preparation perspective that you often advise your clients on taking before they go through this and ensuring that they have their ducks in a row, and would love to hear the same from Les from his perspective as well.
Yeah, thanks, AJ. I'll be happy to address that. So a lot of this has to do with really the motivations of the shareholder group, and the dynamics can be widely varying on these transactions. You can have owner-operator or a shareholder group that is looking to establish themselves as a platform, go the private equity route, and try to build their own St. Croix, for one example. Whereas on the other side, you might have a lot of folks maybe at the end of their career and they're considering their exit, and this is their retirement event. So that's a much different situation. And it's just important that you go into a process being very transparent and clear with your investment banking advisor, ideally Provident, with what your goals and aspirations are for a deal, so that we can kind of formulate a strategy for the process. One of the things I know that is critically important for individuals that run a home health agency, a hospice agency, or anything within post-acute care is a high degree of sensitivity to word getting out at the local level about a process. So I think we are fine in running processes that are limited in terms of knowledge to just the shareholder group. And sometimes that could be from start to nearly to the entire, all the way through to the finish line. Depending on the steps you want to take going into a process and your willingness to maybe spend a few dollars out of pocket, for lack of a better phrase, we would advise our clients in certain instances to take the appropriate steps and potentially engage with other third parties in a pre-marketing exercise. And there's a couple of things that you can do that some of our clients are willing to spend some money on. One of those would be a sell-side quality of earnings review to ensure that, we're looking at your business from an accrual financial perspective in an appropriate light. It will add incredible credibility to the process, will allow you as a seller to go into that process with a lot more comfort that whatever deal is cut at whatever multiple we agree to, you should have a high degree of certainty that that's where we will end up at the end of the day, assuming we get through diligence and there's no other issues. We would also recommend for some of our clients, if they're willing to take this step in parallel, to work with an outside clinical consulting firm. Perhaps somebody, I will just use hospice as an example. The cap can be somewhat complicated. It can be somewhat difficult to measure. And I would tell you that if you have a cap issue, unfortunately, that is dropping right to your bottom line. And it's pretty important that we know that going in so that you don't have an expectation of a certain valuation. And lo and behold, the buyer uncovers that, you had $500,000 of cap, and that's going right to the bottom line. So those are things we would advise all of our clients to look into. Take a very thoughtful approach about how you want to go to the market, who you want to talk to. A lot of our clients are very sensitive. They typically will shy away from engaging with prospective suitors that are in their current market. And we understand that. I mean, nurses can talk. They don't want their marketers finding out about a process or anything like that. So we're very sensitive in that regard. And I think those are all the types of things you should be considering as you think about taking that very important step. And for many people, it will be the only time they do this of running a transaction process and potentially selling or recapitalizing your practice.
All good points. Les, would welcome the chance to hear from you as well on the typical steps that you encourage your clients to take when advising them on preparing for a transaction process, especially from the lens of the legal side of due diligence and all of the associated kind of work streams that go along with that.
Thanks, AJ. I think honestly the first place that we would start when it's an existing client, or maybe it's even a new client that's come to us for transactional representation, is we would only ask them, do you have a banker? And we really feel that having an investment banker in today's environment is really an important feature. And many of the sellers that Kevin had referred to, maybe that, they've built this company and they've been doing it for 30 years, they're not really familiar with how this all works. So I think a lot of what we end up doing is not just being legal advisors, but we're also being process and business advisors to the extent that, that we can. And we feel it's really important to have a client speak to an investment banker and make a selection because the value, honestly, that you guys add to the overall experience is really, really important. And clients don't always necessarily appreciate that. So that would probably be one of the first, building blocks that we would want to make sure are in place. We'd also want to know, is the rest of the team filled out? I mean, if we're already there, then we obviously think they've got great legal representation, but do they have financial advisory services that they may require? Kevin mentioned, clinical support, and maybe doing a sell side Q of V is really important, and making sure that some of those cobwebs, if they're there, get cleared away before you get deep into a process and out into the market. It's also important to frame your expectations. What does the owner really want to get out of this transaction when it's done? Does he or she just expect to cash out and retire? Do they expect to have some kind of a continuing role in the transaction? That may shape what they're willing to accept or what they want to accept from a consideration point of view, whether it's just cash or maybe cash in some combination of an equity role or maybe even an earn-out. But getting even a little bit more granular, AJ, it's really important to also have your house in order, to make sure that you're now gearing up for a fulsome due diligence process. I think everybody on this call would acknowledge that due diligence has become really, really important and can take a lot of effort. So making sure that you're able to answer the questions that your prospective buyer is going to ask, quickly and efficiently is really important. Identifying potential gating issues like regulatory consents or third-party consents for critical contracts that you might need is really important. Maybe if it's a larger transaction, maybe you've got a Hart-Scott-Rodino or other antitrust clearance that you need to get. So nobody wants to be surprised, a month or two into a transaction, finding out, oh, I've got to go get this regulatory approval and it's going to take me 6 months to do that. It would have been great if I knew that, early on. So we really try to figure out what the yellow lights are early on and kind of get those balls moving in tandem along with the bankers and other advisors. So we're kind of running on on an all points platform going out.
All good points, and appreciate the plug for investment bankers. We likewise would say that having quality legal counsel with healthcare experience and precedent experience within, especially in this case, the post-acute care, home health, hospice arena is really crucial to getting a transaction completed and having your best interest looked out for by third-party advisors. So I wholeheartedly agree. And I think, Les, both you and Kevin touched upon some of these, but perhaps just to crystallize them a bit further for our listeners, the home health, hospice arena, and Medicaid personal care services, they're very highly regulated. They're predominantly government payer sourced in nature, and that goes with it a number of different requirements from a compliance standpoint, from a regulatory standpoint, and ongoing just legislative action items that are fairly unique to this space compared to other areas of the economy. But if you were to think through some of the common reasons why some of these transactions go sideways and what the legal implications and kind of regulatory issues that go along with them are, Les, maybe you can speak to some of these points that groups should be familiar with heading into a process just so they can be prepared and head off some of these concerns proactively.
Sure. Thanks, AJ. So I think just a couple of other points, and then I'll jump on that a little bit. I think sometimes the reasons why deals don't go forward is you have a misalignment of expectations. Maybe the buyer has one set of expectations, the seller have a different set of expectations. It's really important early on to see if you can, marry those up as closely as possible. And that goes not only on a financial side, but also from a timing side. I mean, as you said, AJ, these industries are regulated, and that means that quite often, particularly state regulators, have an interest in who's going to come in and buy and own the hospice agency or the home care agency. In some states, it just can be a notice filing. In other states, it's a full-on regulatory approval. So you've got to make sure that you're leaving enough time in the transaction to get that set up and push through. And again, if you don't have a good sense of what that means and how you're going to get there, and have a disconnect on expectations. Also, sometimes you look at a gross number, and at the end of the day, it's not the same as the net number. And so a little financial planning on the front end helps a lot so that people can have a realistic sense of what are they actually going to get out of this transaction, and that marries up with what their expectations are. I also think being patient, no matter how well you try to forecast all the potential issues, invariably something will come up. And I think if people can just remain calm and thoughtful in figuring out, well, we have a problem, how are we going to navigate it? Let's figure out how we get to yes, not just a speed bump that we can't get over. So again, I think having a good team around you, whether it's good bankers, lawyers, other financial advisors, will help that owner figure out what's really the right end result and what's a reasonable risk allocation under the circumstances.
Terrific. I think those are all good points. Alignment of interest is crucial. Timing is very important, and just having the advanced planning from a financial perspective, a legal and regulatory perspective, all pay off in spades as you think about a deal process and ensuring that there's a successful outcome at the end of the day. So just the last topic that we wanted to cover in our podcast here today is around expectations for 2021. I think everybody on this call has acknowledged that there is a lot of activity going on within the space currently, and that we expect there to be continued activity getting into the new year. But Les, just as you've worked through these transactions and interacted with all these various constituents from an M&A perspective, any trends that you're mindful of when you're advising your clients thinking about a transaction next year or beyond? And would love to hear the same perspective from Kevin and Jake as well.
Yeah, thanks, AJ. I think these are really, as we've all said here, these are really interesting times. I mean, I can't remember the last time when we had so many active transactions going at the same time, and what appears to be a pretty clear runway for that to continue into 2021. Hopefully, knock on whatever this desk is, for mica or wood, or or something that certainly continues, because all the indications are there. It's a good question, AJ, because I think if you ask that question in November and December, you might get a somewhat different answer than you'd get in January and February, for the following reason. As you get towards the end of the year, people's tax concerns tend to be more present than they are, early on in the year. And while it's not always the most popular answer, we really try to counsel clients with Q4 type of transactions that don't let your tax considerations be the only driver. If it's a good deal, it's going to be a good deal. And if you're rushing to just get something done, just to get it done by 12/31, you might end up leaving something on the table or ending up in a direction that you didn't anticipate if this deal launched in January, or February, and taxes weren't necessarily, as high on your radar. So I think, trying to game the tax system, because nobody really knows what's actually going to happen next year, I think, can be a mistake. So just be thoughtful, keep your perspective intact, the things that got you into this transaction in the first place, why do you want to do it, and what are your expectations coming out of it, and what are you expecting to net, and what's the next chapter of your life going to be like, should always override, a short-term consideration.
Yeah, that's good insight. Taxes are an important consideration, but shouldn't be the only consideration. And it's important to pay attention to all the other various deal aspects like you alluded to, Les. Kevin and Jake, what are your predictions for M&A activity going into 2021 and beyond within the home health and hospice arena?
Yeah, thanks, AJ. Well, I certainly don't think we could have any expectations that we'll see the flurry of scalable hospice transactions that we've just seen in the last 30 days. I think there were some motivations there for groups to transact this year. And if you kind of look at the landscape of the hospice market, kind of running out of large providers that aren't, private equity backed or publicly traded at this point in time. I mean, just about all the large groups have transacted now, with a few exceptions. I would fully expect that hospice will remain at the forefront of valuation and interest within the post-acute care space. There are countless number now of strategic and private equity-backed groups that are flush with capital. And it really doesn't matter what part of the country you're in, you're going to have multiple options as a hospice provider to sell or recapitalize your agency. There's really no getting around it at this point. So expect hospice to continue, with really no end in sight, with very high levels of activity and high valuations. It was very encouraging to see the Mission Healthcare deal close just recently. Mission does a lot of hospice, but they're also heavily involved in the home healthcare space. I do think, as Jake indicated earlier on the call, that's a market that's had some headwinds. I think we're starting to see buyers get much more comfortable with, where, the margins and the financial profiles of these businesses and agencies are heading. And I think we're going to start to see some larger scale Medicare home health deals trading as we move into next year. We're going to continue to see, this kind of continuum of care kind of being built in terms of these platforms. We're going to continue to see personal care, home health, and hospice groups coming together under a cohesive platform. I think the fourth leg of the stool, something we really haven't talked about, but I would definitely keep an eye out for this as we go into 2021, is starting to see pediatric come into play as well. There's some very, very large pediatric platforms out there, and it's my belief that you're going to see some integration now between pediatric and adult care models. And so I think that's something to look out for as well as we move into 2021, along with, again, I think a high volume hospice transactions and activity in that space.
That's terrific. And I think, just my general takeaway and consensus from this discussion is that there's just a very ripe market out there with a plethora of options for groups that are considering a transaction, and that at the same time, it's important to be well prepared heading into a transaction process and have the right team and the right tools at the operator's disposal in order to ensure a successful outcome that aligns with their interests and motivations to go through a transaction. And I think we could, certainly go on and on about a number of different influencing factors around the M&A activity within home health and hospice and just post-acute care more broadly. But I think these have all been very valuable insights that are helpful for our listeners, and we would look forward to hearing our listeners' feedback either by the App Store or feel free to reach out to us at podcast@providenthp.com. We'll also provide Les's contact information as well. And Les, in particular, we really appreciate your time And we think that you've brought some valuable insights to our podcast here, and it's always a pleasure speaking with you. And Jake and Kevin, likewise, we appreciate your time and your perspectives on home health and hospice consolidation activity.